Hi, this is Lara at Elliott Wave Stock Market with a weekly analysis of gold for you, done on Thursday 27th of June after market close of Wednesday the 26th. I'm recording this video just 5 minutes after midnight New York time on the 27th. My last analysis, I had a target for the end of an intermediate degree third wave at 1232 to 1216. Prices moved into that target zone and the structure is complete. I had thought that that target was about 6 weeks away. It wasn't. It was reached in just 1 week. So the bigger picture sees gold in a big fourth wave zigzag at cycle degree, and this is where the C wave of the zigzag starts. And so far we have intermediate 1 and 2. Intermediate wave 3 is now complete and is $10.48, $10.48 longer than 4.236, the length of intermediate wave 1. Within intermediate wave 3, there are some really nice Fibonacci ratios, which gives me a bit more confidence that this wave count is correct. Minor wave 3 is 21.24 longer than 2.618, the length of minor 1, and minor wave 5 is just 6.08 short of 1.618, the length of minor wave 1. There's some great Fibonacci ratios in this final fifth wave, and on the daily chart it does subdivide beautifully as a 5-wave impulse. I expect that this is it for now for gold, and we should be seeing choppy, overlapping upwards movement for maybe 3 weeks and possibly longer, maybe even up to 6 weeks, depending on what structure this fourth wave at intermediate degree takes. This second wave correction was a relatively deep zigzag structure. It's a 66% correction of intermediate wave 1, and it subdivides as a zigzag, and it lasted 3 weeks. Given the guideline of alternation, I'd expect intermediate wave 4 to be a relatively shallow correction of intermediate wave 3, so the target will be the 0.382 Fibonacci ratio, which is at 1425.37. Draw a channel around primary wave C using Elliott's first technique. Draw the first trend line from this low labelled intermediate 1 to the low of intermediate 3 here. Place a parallel copy a bit further out. Usually you'd put it on the end of the second wave, but place it higher up to contain all this movement. And look out for the fourth wave to find resistance at the upper edge of that channel. When there is more structure within this fourth wave, I will use minor wave degrees to calculate the target, so this target, as we get closer towards the end, will change. At this stage, we'll just expect it to be about the 0.382 Fibonacci ratio, which is also slightly above the end of the fourth wave of 1 lesser degree. There are 13 possible corrective structures for this fourth wave. We can't say for sure which one's going to unfold, but given the guideline of alternation and the common structures for fourth waves, we can expect it will be most likely a flat correction. The second highest probability would be a combination, and least likely would be a triangle. It could also be a double zigzag, although that would be quite unlikely. It could also be a single zigzag, probably the least likely structure. Intermediate wave 4 may not move into intermediate wave 1 price territory above 1672.77. If this fourth wave unfolds as an expanded flat or a running triangle, we may see a price extreme, a new low, beyond the start of this structure. So for that reason, there can be no lower invalidation point at this stage for this fourth wave correction. The long-term target for primary wave C may be now only about 2 or 3 months away, depending on how long the fourth wave takes, and will remain the same. At 1151, primary wave C would reach 1.618, the length of primary wave A. Let's have a look at the end of this fifth wave on the hourly chart, where the end of intermediate wave 3 down here is this point down here. So here's the final fifth wave. So within minor wave 5, it starts just off to the left of the chart. Here's the end of 1, 2, a long third wave, a little fourth and fifth wave. I've checked all the Fibonacci ratios in here. I won't go over all of those in the video, it would just make it too long. They are all detailed in my article on the website. I've drawn a little channel around minor wave 5 with a first trend line for the ends of 1 to 3 and a parallel copy. I placed it on the end of 2 and then I've pushed it out so that it contains all of this movement for minuet wave 5. When this channel is very clearly breached with upwards movement, I would be more confident at that stage in calling an end to intermediate wave 3, and I'd be more confident that would be in a fourth wave correction to last at least 3 weeks. It should be choppy, overlapping and difficult to analyse. We won't be certain exactly what structure it's taking until we get towards the end of it. So I expect for now that's the end of downwards movement for gold. We're going to see very choppy, overlapping, sideways and upwards trending movement. And if it turns out to be an expanded flash or a running triangle, we could, within it, see a new low. It's impossible to tell which of the 13 possible corrective structures it's going to undertake. All we can say at this stage is it's probably going to trend upwards to find resistance at the upper edge of that channel on the daily chart. That's all for me today with your gold analysis, and I hope that everybody had a fabulous week.